Welcome to Accounting, Finance and Banking, specifically the cash book. Introduction or objectives. 1. To define cash and cash items. 2. To describe various types of cash books or journals, that is, the single column, double column, triple column, petty cash book, analysis cash book, etc. These two will be presented later. Then, to explain the procedure of recording or posting and balancing the single column, double column, and three column cash books. A cash book is a financial statement that shows cash inflows and outflows of a business for a certain period of time. And the cash items that flow in and out of a business are regarded as liquid money, checks, money orders, bank drafts, bills of exchange, promissory notes, etc. The liquid money that flows in and out of a business are recorded in a cash account, while those monies, that is liquid money, checks, money orders that flow in and out of a business through the bank are recorded in a bank account. The format of a cash or bank account. On the left hand side, we have the DR or debit side. On the right side, we have CR or credit side. In each side, from this red line at the middle, where we form a T, on the left hand side, we have the date, details, ledger folio, and amount, either in shillings, dollars, or whatever currency. It is these columns also are repeated on the right hand side, that is on the credit side. That is the date, details, ledger folio, and amount. In the date column, we enter the date when the transaction takes place and then the details of the transaction. What has happened? Is it a sale, a purchase, a payment for money, or a receipt of money that was earned earlier on, or such? And then on the ledger folio, we have the ledger where that transaction will appear, and then the amount of money that is either received or that is paid out. We start with the single column cash book. It has one money column, this amount column, on each side of the cash book. A business may keep a cash account and a bank account separately. A cash account is used by businesses that use or accept cash only and do not accept other forms of money like checks, money orders, bills of exchange, promissory notes, postage stamps, etc. And a bank account is used by businesses that use or accept cash and other forms of money like checks, money orders, bills of exchange, promissory notes, postage stamps, and the money may go through the bank. We look at an example of a single column cash book. The following transactions took place in the business of KK Traders in January 2010. On 1st of January, the business started with a capital of 50,000 cash and 120,000 shillings at the bank. On 2nd, KK Traders bought furniture by check at 15,000 shillings. On that, they paid rent by cash at 20,000 shillings. On 5th, they bought goods by check at 30,000 shillings. On 8th, they made cash sales of 20,000 shillings. On 10th, they received cash from Koigi Adeta worth 12,000. On 12th, they made cash sales directly banked by the buyers, equivalent to 10,000. On 14th, they took cash from the cash box to the bank, equivalent to 4,500 shillings. On 15th, they received commission in cash of 5,000. On 18th, they paid salaries 4,000 in cash and 6,000 by check. On 24th, KK Traders withdrew cash from the bank for office use, which was 20,000. Something to note, the blue written items will appear in the bank account, while those in black will appear in the cash account. So the cash account will look like this. On first, capital 50,000. This 50,000, they received that cash, or it is the cash that is in the cash box. It is entered on the DR side because it is a receipt. On second, they bought furniture by check. Which will appear in the bank account on the debit side. On first again, we have capital 120,000, which is in the bank. That will appear in the bank account debit side, 120,000. On that, they paid rent by cash at 20,000, which will appear on the credit side of the cash account. On 5th, they bought goods by check at 30,000. That will appear in the bank account because a check will be cleared through the bank, and we are giving out or paying out money, 30,000 on the credit side. On 8th, we made cash sales of 20,000. That is a receipt that will appear on the debit side of the cash account. On 10th, they received cash from Koigi Adeta, 12,000. They had sold goods earlier on and they are receiving money now, 12,000 on the debit side of the cash account. On 12th, cash sales directly banked. This money was deposited in the bank account of KK Traders in cash. That will appear in the bank account 10,000 on the debit side because the money was directly banked by the buyers. On 14th, they took cash to the bank equivalent to 4,500. So they took cash from the cash account, they gave out 4,500 to the bank. And then the bank account received cash 4,000. That is better known as a contra entry. On 16th, they received commission in cash 5,000. Commission in cash recorded on the debit side. On 18th, they paid salaries. First, 4,000 in cash and 6,000 by check. So, salaries by cash paying out 4,000 and by check 6,000. On 24th, they withdrew cash for office use. So on 24th, they withdrew cash. So the bank will lose cash equivalent to 20,000, which will then be banked, will be received in the cash account, the same amount, 20,000. And then we balance the accounts. On the debit side, we have 107,000 shillings. This is the same figure that will be balancing because on the credit side we have a shortage of 78,500. This balance will be inserted here as balance carried down so that the two sides can balance. And then it will be brought down here so that we can open February with this amount, because that is the amount that is in the cash box. The same will be done for the bank account. You compare the debit side and the credit side. It appears that the debit side has more amount than the credit side by 63,500. So 134,500 is inserted at the bottom, both columns, and then the balancing figure 63,500 is inserted on the credit side so that the two sides can balance, and it is called balance carried down. And then it is brought down on the left hand side so that we can have that as the opening balance for February. Some notes to make. In real life, cash and bank accounts are in different pages of the cash book. In the ledger folio column is recorded the name of the ledger and the page where the account named in details column is to be found. Here we have general ledger, contra, sales ledger, etc. The double entry transaction for 14th and 24th are completed in the cash book, that is the cash account and bank account, and not in another account. And these are accounts that deal with money or cash inflows and outflows. This is called a contra entry. No money is given out to others and no money is being received from others, but within the business. So the C that appears here, C, you have another C here, C stands for contra or contra entry. Then you have CD standing for carried down and BD standing for balance brought down. The double or two column cash book. These two accounts, that is the cash account and bank account, can be merged or appear side by side on the same page to form a two column cash book. It has two money columns on each side, that is on the debit side and the credit side. We have this first column and this second column. First column, second column. The first column represents the cash account and the second column represents the bank account. Repeating the same transaction for KK traders, as we had said, the black items represent the cash account and the blue items represent the bank account. And these are the entries. Again, it's like bringing the cash book and the bank account together. Those items that are appearing on the debit side of the cash account will appear on this column. This represents debit side cash account. And those items that were appearing on the debit side of the bank account will appear on this column representing bank account. The same. These items are on the credit side of the cash account. They are here now. The same here. Those items that were appearing in the bank account are in the bank column here. And these figures, as we had seen, are the same. It's just merging the two. So we are increasing the number of columns from 1 to 2. Cash and bank on either side. When it comes to balancing, we look at both sides. The side that has a higher amount, we record that amount at the bottom on both sides, and then we look at the difference as we had done with the cash account and bank account. It is worth noting that the bank account may end up with a credit balance that is the credit side having more amount than the debit side. It's because we can be allowed a soft loan known as a bank overdraft, and we draw more money than we have in the bank. It is usually paid with some interest. Then we have triple or 3-column cash book. It has 3 money columns on either side, that is the debit side and credit side. And these columns represent discount cash at the bank. Coming back to the 2-column cash book, we have 2 columns. Here we have an additional column for discount here and an additional column here for discount between the ledger folio and cash column. And still we have the ledger folio on both sides. So we insert a column here and a column here. The column on the debit side is known as discount allowed, and the column appearing on the credit side is known as discount received. We go back to those discounts. When you buy in large quantities, you are offered a discount. That is lesser amount than the quoted amount of money that you should give for a certain product. And if a trader is giving another trader who intends to resell the products, is giving a discount, that is known as a trade discount. Both are not recorded in the books of accounts. But a cash discount is recorded in the cash book because it is involving receipt and payment of cash. So, a business person may encourage debtors to pay promptly, and when they pay promptly, they get a reduction in the price of products. So, on the debit side, we have discount allowed to debtors. And on the credit side, we have discount received from creditors or suppliers. The entries for the discount allowed and discount received are separate. They are not balanced as in the case of cash, with cash column, bank, and bank column. Discount allowed relates to sales and debtors, and discount received relates to purchases or suppliers or creditors. So they are never balanced, as we will see. You go back. A 3-column cash book is regarded as a subsidiary book because it contains a list of discounts received and discount allowed. And it is also a ledger in that it holds the cash at the bank accounts. We look at an example. Pasha Enterprises on 2011 January had the following transactions. It had 22,500 in cash and 250,000 shillings at the bank. They had cash sales of 465,200. They received a check on 5th for 451,250,000 from Kamau Traders in full settlement of their debts after allowing a 5% cash discount. On 15th, they paid Ndaru Traders 184,000 in cash after deducting a cash discount of 16,000. On 18th, they sold goods on credit to Kavoy at 8,000. This will not appear in the cash book because it is a credit transaction. No cash is involved. They'll be paid later. On 20th, they deposited 200,000 from the cash till or box into the bank. On 25th, they paid wages equivalent to 144,000 in cash. On 28th, they settled Mbago Traders account of 300,000 by check, less 15 cash discount. On 29th, they withdrew 250,000 from the bank for office use. And on 30th, they deposited all the cash into the bank except 59,700 that remained in the cash box to be used in February. So the entries will look like this. Remember, on the DR side, I have date, details, ledger folio, and the 3 columns: discount allowed, cash, and bank columns. Again, on the credit side, we have date, details, ledger folio, discount received, cash, and bank columns. We go back to the first transaction. They had 22,500 in cash and 250,000 at the bank. 1st January, balance brought down from December 2010. Cash 22,500. The money at the bank 250,000. On 2nd, they made cash sales of 465,200. When they sold goods on 2nd, they received cash equivalent to 465,200, recorded the cash column. On 5th, they received a check for 451,250 from Kamau Traders in full settlement of their debts after allowing a 5% cash discount. So Kamau Traders paid Pasha Enterprises 451,250 to settle their debt where they had bought goods on credit in the previous period. And because they had been promised a discount, they were to deduct 5% cash discount. So Kamau, a debtor, paid 451,250 less 5% discount, which is equivalent to 23,750. So they wrote a check. So on the face of the check, it was 451 less 5%. So 451 is 95% of the total amount that they were to pay. Then on 15th, they paid Ndaru Traders 194,000 in cash after deducting a cash discount of 16,000. So they gave out 184,000 to pay Ndaru Traders as supplier after deducting 16,000, which was a discount that they received from Ndaru Traders. On 18th, as we have said, that transaction will not appear in the cash book because it is a credit transaction, not involving cash for now, but it will be recorded later. On 20th, they deposited 200,000 from the cash till into the bank. They deposited 200,000. They deposited 200,000 from the cash till into the bank. So the cash account on the credit side loses 200,000 to the bank, and the bank account DR receipts receives 200,000, the same amount from the cash account. On 25th, they paid wages equivalent to 144,000 in cash. Payment, cash column, 144,000 wages. On 28th, they settled Bago Traders account of 300,000 by check, less 15% cash discount. They paid Bago Traders their money. They had a debt of 300,000, but now they are paying 255,000 after deducting 45,000 shillings after receiving a discount. On 29th, they withdrew 250,000 from the bank for office use. On 29th, they withdrew 250. The bank column on the credit side is recorded 250. The bank is losing or giving out 250 to the cash account. They withdrew 250 from the bank to the cash account or cash box or cash till, 250,000. So it is received on the DR side, cash column. They deposited all the cash in the bank except 59,700. So we are told that 59,700 remains as the balance of cash in the cash box or cash account. The rest is deposited in the bank. So here we have a number of steps to make or take. We first look at the cash column. We compare the two, and we start with the totals for the cash column, which is 737,700. The same is recorded here as the balancing, so that we can look for the balancing figure, 737,700. It is step number 2. Then step number 3 is entering the 59,700 as the balance carried down. What will remain in the cash account after we deposit some money in the bank. Then from there, we add this payment, and whatever remains, we add up that, and then we deduct from 737,700, and we get what was to be deposited in the bank, and it is 150,000. This is step number 4. So 184,000 plus 200 plus 144 plus 57. The difference between that and this balancing figure is 150,000. Step number 4. Then we are told that this amount, which is coming from the cash box or cash account, is deposited in the bank. So bank column receives the same amount, 150,000. That is a contra entry number 3 here. Step number 5. Then step number 6 is looking for the balancing figure for the bank column. And we found that this column on the debit side is higher than this column amount on the credit side. So the balancing figure is 1,051,250. Then we record it here, step number 7. And then we look for the balancing figure between this and these two figures, and we get the balancing figure or the difference as 546,250. This is the balance carried down for the bank. Step number 8. The These two figures are brought down here so that they'll be the opening balances for February. So 59,700 is recorded under the cash column, and 546,250 is recorded on the bank column or in the bank column. We are through with balancing the two columns. Then we have discount allowed and discount received. Remember, these relate to different activities and different accounts. So we look for the total figure on the debit side, discount allowed, and then we insert that figure here. We are through with that, step A. Then step B, we look at the total for this column, 16,000 and 45,000, and we insert that here. We don't balance this against this because they relate to different accounts and different activities. This relates to debtors of those we sell to, and this relates to suppliers or our creditors. We are through with that. Thank you. May God bless you. Subscribe and like my videos and channel. My name is Edward Kariuki Madenge, kariukied2010@gmail.com. Thank you.